Hello and welcome to AE Accounting Tutorials. We are continuing our series on control accounts. But take note that in the part 1 of this video, we've already looked at the basic concept of control accounts, the format of both sales ledger control accounts and purchases ledger control accounts, and every item and the reason why they are debited or credited to each account. But in this particular video, I want us to take a full practice question, a very comprehensive one, and solve it together to enhance our understanding. A very comprehensive because every single item that's supposed to be in a normal control account question is found in this particular question. So if you're able to understand this practice question, I assure you that you should be able to solve all questions on control account. So if you are new to this channel, I will encourage you to subscribe to this channel. You turn on your notification bell so that any moment I upload any new video, you get notified on your devices, and also share this video for others to also benefit. So as I said it earlier on, we are taking a full practice question, a very comprehensive one, where we will be required to prepare a sales ledger control account and a purchases ledger control account and disclose the closing balances at the close of the period. So let's quickly go through the question and see how we could solve this question. The following balances and transactions appeared in the ledger of Freeman Company Limited for the month of January 2022. 1st January, debit balances in sales ledger 12,890 Ghana cedis. Credit balances in sales ledger 1,640 Ghana cedis. Debit balances in purchases ledger 2,180. Credit balances in purchases ledger 47,500. Transaction during January 2022 were as follows. Credit sales 87,000 Ghana cedis. Cash sales 12,000 Ghana cedis. Credit purchases 96,200. Cash purchases 22,000 Ghana cedis. Return in was 6,460. Return out was 5,520 Ghana cedis. Discount allowed 9,200. Discount received 8,500. Cash received from credit customers 45,000 Ghana cedis. Debit note received 5,000 Ghana cedis. Credit note issued 2,000. Contra settlement 1,000 Ghana cedis. Check paid to suppliers 57,100. Check received from debtors 35,690. Cash paid to creditors 37,900. Provision for doubtful debts 20,000 Ghana cedis. Bill payables 18,900. Bill receivables 17,700. We have refund to credit customers for overpayment 10,000 Ghana cedis. Bad debt written off 6,000. Check from customers dishonored 18,000. Cash refunded to customers for damaged goods 9,000. Interest charged on credit customers for overdue debt 4,000 Ghana cedis. Debit balances in the purchases ledger set off against credit balances in the sales ledger 15,000 Ghana cedis. Sales ledger debit balance transferred to purchases ledger of 2,000 Ghana cedis. Purchases ledger debit balance transfers to sales ledger of 1,000 Ghana cedis. On 31st January, credit balance in sales ledger 3,500. Debit balance in purchases ledger 2,900. You are required to prepare sales ledger control account, purchases ledger control account to disclose the closing balances. This is the question, and we are required to prepare a sales ledger control account and purchases ledger control account to disclose the closing balances of the two accounts at the close of the period. I said this is very comprehensive because the question is actually loaded. All items and clues that are supposed to be found in a normal control account is found in this particular question. So you listen very carefully as we solve it together to enhance your understanding once and for all. So to begin with, we begin with the name of the company. That is Freeman Company Limited. Then we proceed to look at our requirements. So we are asked to open two different accounts, sales ledger control account and purchases ledger control account. So let's see how this will be presented. So this is the first requirement, the sales ledger control account. And the second requirement is the purchases ledger control account. Is that okay? So I want us to make the entries simultaneously, but not just about recording it in debit credit, understanding the reason why they are debited or credited, not just putting it at the back of your mind that, oh, discount allowed to be recorded at the credit side of sales ledger control. No, all the entries we are to pass over here, I want us to know the reason why they are either credited or debited. Is that okay? Good. Before we start recording in the sales ledger control account and the purchases ledger control account, there is one clue that I want you to put at the back of your mind. This sales ledger control account, it is also known as the total debtors control account. So it functions as the same as the debtors account. So debtors has a natural debit balance. So they increases at the debit side and decreases at the credit side. So any item that will increase the debtors balance will be debited to this account, and any item that will reduce the debtors balance should be credited to this account. On the other hand, the purchases ledger control account functions as that of creditors account. It is also called total creditors ledger control account, and creditors account increases at the credit side, decreases at the debit side. So every item that's supposed to decrease the creditors account should be debited to this account. Every item that's supposed to increase or that will increase the creditors account should be credited to purchases ledger control account. Is this clear? Good. So now let's go through the question and take the item one by one and try to record them in these two accounts. So the first item from the question is debit balance in sales ledger 12,890. So debit balance in sales ledger, this is the sales ledger control, and the question is saying that debit balance, straightforward. So a debit balance, and this is a balance brought forward, and it's 12,890. The second item says credit balance in sales ledger 1,640 credit balance. So when it comes to sales ledger, we come and record the balance. These are the opening balance brought forward 1,640. 1,640. Good. The next item is debit balances in purchases ledger 2,180. So a debit balance in the purchases ledger. So when you come to the debit side, we record the opening balance. So we call that balance brought forward, and it's 2,180, a debit balance. So from the question, the next item says that credit balances in the purchases ledger is 47,500, a credit balance. So we have balance brought forward 47,500. Good. So these are the opening balances. Recording the opening balance is very simple. Wherever the question tells you that the balance should be recorded over there. But sometimes they will give you one balances without telling you where you should record it. They will say sales opening balance of sales ledger. They will give you the amount, but you have to know that for a single balance for sales ledger perform the function of a total debtors account, and debtors has a natural debit balance, so you have to record it at the debit side. Or they will give you just one balance for purchases ledger. You should have to know that purchases ledger is the same as the total creditors, and creditors has a natural credit, so you record as credit. So if they give you a single balances, you should be very careful without telling you where you should record them. But with this, they have tell us where we should record it. Is that okay? Good. So let's proceed. Transactions during January 2022 were as follows. Credit sales 87,000. Credit sales will increase the sales ledger control account, so it will be debited. Credit sales will increase the debtors account. The double entry for credit sales is that we credit our sales account and debit our debtors, meaning that our debtors account will increase. So we come to sales ledger and say credit sales. And the amount is 87,000. Good. The next item in the question is cash sales, 12,000. Where do we record cash sales? Listen and listen good. Cash sales are not recorded in control accounts. If business makes sales and cash is received, the double entry is that we debit cash, credit sales, no data. So we don't have to record it here. So if it is cash sales or cash purchases, we don't record it in control accounts. It is just in the question to confuse you, so you should be very mindful of that. The next item is credit purchases, 96,200. A credit purchases. A credit purchases will be recorded at the credit side of the purchases ledger. Have it at the back of your mind that this account is creditors account. So what is the double entry for credit purchases? We credit the supplier or the creditor and debit our purchases. So we come to the purchases ledger and record a credit purchases. And the amount from the question is 96,200. Good. The next item is cash purchases, 22,000. I told you that for cash purchases and cash sales, we don't record. Is that okay? Good. So the next item again is return invoice, 6,460 from the question, return invoice. Where do we record return invoice, or when does return invoice occur? That is when customers return goods to the business. Customers are the debtors. So when they returned, the return will reduce their balance, because when they return the goods, they are returning parts of it and their balance have to reduce. And any item that reduces the debtors balance should be recorded at the credit. So return invoice will be found at the credit side, 6,460. So return invoice, 6,460. Good. The next item is return outwards. Return outwards goes with purchases ledger. When business return goods to their suppliers or creditors, the creditors account will be reduced because part of the goods has been returned, and any item that reduces the creditors account should be debited to purchases ledger. So for return outwards, from the question, 5,520. Good. The next item to talk about is discount allowed. Discounts allowed will be recorded in the sales ledger because discounts are allowed to debtors or credit customers or customers. So when discounts are allowed to them, it reduces their balance. So we have discounts allowed. From the question, the amount is 9,200. Very good. The next item is discount received. Discount received will enter the purchases ledger control account. Discount received is when creditors or suppliers give business discount. When they give the business a discount, the suppliers account or the creditors account will reduce. Because of that, it should be debited to this account, and the amount is 8,500. So discount received, 8,500. One key thing I want you to also take note is that if an item is recorded at the credit side, let's say discount allowed in sales ledger, the opposite of discount allowed is discount received. So it will go to the opposite side. It is at the credit side in sales ledger. So when it goes to the other account, which is purchases ledger, the opposite of discounts allowed is discount received. It will be recorded at the opposite, which is debit side. You can see that of return inwards and return outwards. You can see that for credit sales and credit purchases. So that is one clue. Next question is cash received from credit customers 45,000. A cash received from credit customers. So when customers or debtors paid an amount, or business received money from the debtors account will reduce. For that matter, it will be credited. So cash received. So this cash received, it is from credit customers and the amount is 45,000. The next item in the question is debit note received. I've explained the concept of debit note and credit notes in my previous video. So you can go and watch it and understand it into details. But when we talk of debit note received, a debit note received, it is a document received from a customer to the business. Listen and listen good. The customer is the same as the debtor. Is that okay? This is a firm or business. So when customers or debtors return goods to the firm, they attach a document or a note called a debit note. And this debit note is being received by the firm. Listen, in the book of the firm, there will be the debtors account this way. In the book of the debtor or the customer, the firm account will be there. And this firm is a creditor to the customer, so it will be creditors account. So the customer will send a debit note and the firm will receive it, and the customer is telling the firm that your account with me has been debited. Creditors account increase at the credit side, so if they are returning part of the goods, then the firm's account, part of the amount owing will be reduced. So if the customer informed the firm that your account with me has been debited, that means a debit note received and the firm has received it. It will be informing the firm that the firm too should credit the customer's account to reduce the debts. Listen, this sales ledger control account and the purchases ledger control account, it is in the book of the firm or in the book of the business. Is that okay? So the debit note received will inform the firm that the customer's account with him should be credited to reduce the amount because it has already been debited in the perspective of the customer. Is that okay? That is why the customer said it is a debit note and it has been received by the firm. So because it will be recorded at the credit side of the debtor's account to reduce the indebtedness, in the sales ledger control, it should be recorded at the credit side. So we call it the debit note and is received. Good. And the amount from the question is 5,000. The next item is a debit note issued. The first one, the one we just treated, was a debit note received, but this one, it is a debit note issued. Is that okay? So debit note issued will be recorded in the purchases ledger control accounts. The reason is that it is the firm that is issuing the notes to the supplier. So that will be a firm and the supplier. And this supplier is also a creditor. Is that okay? Good. So in the book of this creditor, the firm's account is a debtor's account. It's a debtor. And in the perspective of the firm, the supplier is a creditor. And the firm has issued what we call a debit note. Creditors increase at the credit side. So the firm is informing the supplier that his account with him has been debited. That is why the firm issued what we call a debit note, credited, to reduce the balance. So when the firm issued a debit note, it is informing the supplier that his account has been debited. Because it is being debited in the creditor's account, when we come to purchases ledger control account, we debit because this is total creditor's account. So debit note Debit note issued. Very good. And the amount there is 2,000. I told you that this question is very comprehensive. All item and clue are in this question. So if you understand it, that is all. You are good to go in solving all control account question. The next item is contra settlement. Contra settlement. When we talk of contra settlement, we are talking about set off. Set off. So set off, it is when a balance on the sales ledger control account, it is being used to cater for that of the purchases ledger control account balance. So that is set off. And set off will be recorded at the credit side of the sales ledger to reduce the balance of the debtors, total debtors. And it will also be recorded at the debit side of purchases ledger to reduce the balance of the creditors, total creditors. So we say contra settlement. And contra settlement amount is 1,000. So the same contra settlement will appear here. And the amount is 1,000. Very good. Next item is check paid to supplier. When we pay check to suppliers, that is creditors, their account will be reduced. So we debit it to purchases ledger. So check paid. Check paid of an amount of 57,100. 57,100. That is check paid to suppliers or creditors. Next item is check received from debtors. When debtors paid a check, the account will be reduced, and any item that reduces the debtors account should be credited to sales ledger control account. So you say check received from debtors. So this time is check received from debtors, and the amount is 35,690 from the question. Good. The next item is check paid to cash paid to creditors. Cash paid to creditors. We have check paid and cash paid. All are payments that reduces their balance. So if cash is being paid to creditors, the creditors account balance will be reduced, and any item that reduces the balance should be debited in the total creditors account, and the amount is 37,900. 37,900. So cash paid. So 37,900. Good. The next item is provision for doubtful debt. 20,000 Ghana cedis. Provision for doubtful debt will not be recorded in any of these two accounts. Provision are just an estimate, so it has no effect on these two accounts. So provision for doubtful debt should not be recorded in control accounts. The next item to talk about is bill payable. And bill payable is a bill of exchange that is used for payments. So bill payable will reduce the creditor's balance. Bill payable. So it will be recorded at the debit side. So bills payable. And the amount from the question is 18,900. The next item is bill receivable. Bill receivable, it is a bill or a bill of exchange that is received from the debtors by the business. So it will reduce the debt that the debtors own. So it will be recorded at the credit side. It is in the form of payment. Payment from the customer will reduce their balance. So bill receivable will be credited to sales ledger control account, and the amount is 17,700. The next item is refund to credit customers for overpayment. A refund, it means customers have made some payment and they are not supposed to make such payment, so the money has been refunded. So if it is refund, it will increase their balance back. Refund to customers, credit customers. So refund to customers. The amount is 10,000. The next item to talk about from the question is bad debt written off. Bad debt written off. Bad debt written off will reduce the debtor's balance. Because of that, it should be credited. The amount is 6,000. So bad debt. So the bad debt is written off. 6,000. Next item is check from customers dishonored. Check from customers dishonored. So if check from customers is recorded at the credit side of this item, if it is dishonored, it should be recorded at a debit to reinstate. Is that okay? So check dishonored. So check dishonored of an amount of 18,000. Good. Next item from the question is cash refunded to customers for damaged goods. A cash refunded to customers for damaged goods. So another cash refund. It means that the customer has made payment, but the money has been refunded because that payment is not supposed to be made. So if a refund is made, the refund will increase the customer's account. So cash refund. So cash refunded to customers an amount of 9,000. Next item in the question is interest charged on credit customers for overdue debt. It means that there is an interest that has been charged on the debtor's balance that has not been paid. So the interest will increase their balance. So I'll say interest on overdue accounts. And it is 4,000 Ghana cedis. The next item from the question is debit balances in the purchases ledger set off against credit balances in the sales ledger. So a debit balance in the purchases ledger, it is being set off. So to set off an amount here, you should record it at the opposite side. It is quite different from the contra settlement. The contra settlement, it is the actual set off, meaning that debtors has a normal debit balance, creditors has a normal credit balance. So if there is set off, then it should be debited to this account to set it off, credited to this account to set it off. But this one, it is a debit balance in the purchases ledger set off against a credit balance in the sales ledger. So if you are setting off here, we should record it here. So a debit balance in the purchases ledger set off against sales ledger credit, and the amount is 15,000. It is set off against a credit balance in the sales ledger. So if you are setting off an amount over here, meaning you're supposed to record it at the opposite side. So what we are going to write over here is that it is a sales ledger credit. So credit of sales ledger set off against the purchases ledger, and the same amount of 15,000. Good, that is the set off. So the next item from the question is sales ledger debit balance transfers to purchases ledger of an amount of 2,000. A debit balance in the sales ledger transfer to purchases ledger. Listen and listen good. It is a debit balance of 2,000. We are to transfer to purchases ledger. So we have to record it at the opposite side to cancel off this amount before we do the transfers. Is that okay? So it is a sales ledger debit balance transferred to the purchases ledger, and the amount is 2,000. We are canceling it off from the debit side because it is a debit balance sales in the sales ledger. We are transferring to purchase. So if you are transferring, we make credit entry. Obviously, we make a debit entry over here. So we say that debit balance from the sales ledger, and the amount is 2,000. Very good. Is this clear? The next one is purchases ledger debit balance transferred to sales ledger of 1,000 Ghana cedis. So a purchases ledger debit balance. A purchases ledger debit balance transfers to sales. If you are transferring from the debit balance, or we are transferring a debit balance, we should record it at the opposite side to make the transfers. So I will say that a debit balance purchases ledger transferred to the sales ledger, and the amount is 1,000. Good. So we recorded at the credit side of purchases ledger. We have to come and record at the debit of sales ledger. So we will say that a debit balance, it was a debit balance from the purchases ledger, and the amount is 1,000. This is how we do the transfers. In this particular question, everything is included. The next thing to talk about is on 31st January, there was a credit balance in the sales ledger. A credit balance in the sales ledger, 35,000. Sorry, 3,500. It means we've reached where we're supposed to balance off this account. So a credit balance in the sales ledger. So we just have to close the account. We have to close it. They said that a credit balance in the sales ledger, right? A credit balance in the sales ledger, meaning that there was a credit balance. When we are talking about the closing balance, we are talking about the brought down. So balance brought down of 3,500, a credit balance in the sales ledger. Before we arrive at a balance brought down, we should have a balance carried down over here. So we have the same amount as balance carried down of 3,500. Do you understand this? Good. The next item is debit balance in the purchases ledger. We have to close this account too. So we say that we will say that from the question, a debit balance in the purchases ledger, a debit balance. So we are talking about balance brought down, the closing balance, and the amount is 2,900. 2,900, meaning that there is a balance carried down over here. So balance carried down of the same amount, 2,900. Very good. So we are done with the entries. What we have to do is to balance off this account. In balancing of this account, we find the total of the debit side of the sales ledger. We compare it with the total of the credit balance. Okay, so with the total of this, we will arrive at, when we add all this, you get 160,490. Then we still add this one as well. When we add this, we arrive at 129,690. So 129,690 this way. Is it clear? So to balance of this, we find the difference between the two. Obviously, the debit side is the larger one. So the debit side will be 160,490. Credit will be 160,490. So what is the difference between these two figures? That is what we have to find out. Okay, and it is an amount of 30,800. So the credit side is shorter of an amount of 30,800. This will be a balance carried down, and it will appear at the debit side as balance brought down again. Balance brought down of 30,800. Good. We are done with the sales ledger control account. Let's balance of the purchases ledger. Let's add this and get a total, add the credits and get a total. Is this clear? The debits will give us 135,000 debits. Then the credit side will also be 162,600. So 162,600 600. Comparing these two, the 162,000 is the larger one, so it will be the total 162,600, 162,600, 600 this way. Then we find the difference between the two. And the difference over here is 27,600. So the debit side is the smaller. So we will have 27,600 at the debit side as balance carried down. The same amount will appear at the credit side as balance brought down. $27,600. Good. So this is how we prepare both the sales ledger control account and the purchases ledger control account. Everything is included. It is very comprehensive. So if you're able to understand this, I expect you to solve every control account question. Is that okay? In our subsequent video, you may look at the concept of reconciliation of control accounts. Reconciliation of control accounts, where we will be reconciling the individual ledger accounts against their respective control account balances to make sure that they all agree. So we look at that concept in our next video. So this brings us an end to the solving of this question. If you are yet to subscribe, kindly subscribe, share this video, and let's make this channel very bigger one. Okay, until we meet our next video, I think it is bye for now.